Good morning, guys. Okay. Um, yeah. Good morning, everybody. Welcome to Josh FX Pro. Today we're going to be treating the topic trading range. Yeah, I know I've I've actually said I was going to do this video. I just had to do it today. Okay, so what is trading range? You already know from the word range. I know the last time we heard this word was when we were talking about the different types of markets, either the trending market, the consolidation or ranging market. Yeah, so we're talking about when we're talking about the uptrend, downtrend, and when we're talking about market structure, that was what we were talking about. That was when we mentioned, or when I mentioned ranging market, consolidation market. So yeah, did I show you? Yeah, I think I showed you an example of what that means. Yeah, so if you have not seen that, go back to the video, go back to, um, what do you call it? Go back to the market structure video and check it out, okay? That you need to understand that before we can now get into this, all right? So I'll show you briefly. I don't want this video to be too long. So I'm going to show you briefly what a trading range is. Okay. What a trading range is or how it looks like. All right. So let's take, for instance, let me clear this. Yeah, clear. Okay. So let's look at this pair. You know, we talked about support and resistance, and one of the things that we delved on or we treated on support and resistance was you will see some of the confirmations that you want to see in supports and resistance, especially if you go check out the video on chart patterns. Yeah. If you check out the video on chart patterns, most of the chart patterns you're going to see is going to be on the supports or the resistance area or the supply and the demand area. Okay. So that's where you're going to see most of those structures, the chart patterns. I'm not saying you wouldn't see it any other place. Yeah, you could see it in the middle of the range or in the middle of the trend, but then the most effective ones that work will be the ones that you see rejecting from a support or demand zone or from a supply or support from a supply or resistance zone. All right. So is you're going to see most of those structures in a support zone and in a resistance zone. So that's what is going to happen. Okay, so now let's delve deep into this and I'll show you what it is. So let's say for here we have I'm trying to do this. Okay, I want to make sure we're on track. I want to get a very good position. Let's see. I want to get a very good position so I could show you what it means. Or should we break it down to a lower time frame? Let's break it down. Let's see how far that goes. Yep. Okay. So basically, right, when um trying to make sure you're in a good area. Okay, so let's use this place. This is more clear. There's so many places, but I'm trying to look for a place, if you don't know these things before now, you struggle with knowing what it looks like. So I want to give you like a what do you call it? Like an example of what this looks like. All right. So okay. So hmm, hmm, hmm. Man, I'm just tired. Don't mind me, Jerry. Okay, so yeah, I'll first draw a structure for you here. Let me draw the structure based on what I'm seeing here, right? Let me draw the structure for you. So we have this, right? Then we have this, which came back somewhere here. Then we have this. Somewhere here. Mm-hmm. Then, yeah. So let's use this. Okay, so first thing first, when if you notice, you'd see that this area is a zone. Yeah, you'd agree with me, this area is a zone. And now we have our swings, our swing highs, swing lows. We have our swing here. There's a, where's that thing? I didn't put it here. Let me see. One moment, please. I really don't want this video to be too long. That sector? No, it's not sector. It's like arc. Yep. Mm-hmm. Perfect. So we have our swing here. This is a swing, a swing point. Why is it this color though? Can I get it on white? Okay, yeah, yeah. So is it too faded white? Let me see. That's fine. All right, so we have our swing there. We have another swing high from this point. This is a swing from the high side to the downside. Why this is a swing from the low downside to the high side. We have another swing point here. This is a swing point. Yeah, from the high side to the downside. I'm using that to just indicate it's the swing. So we have another swing here from the high side to the downside, from the downside to the upside, rather. Yep. So now, take for instance, with all the swing that we have, this is a zone, right? Now, after you get the zone like this, a market give you swing points like this. So when you have, what we have here is a series of break-off structures. We talk about this in market structure. We have a series of break-off structures here, market breaking a structure here. Yeah. And also here, market breaking the structure here. Yeah. So when you're talking about trading range, so you're referring to the range after market had broken structure or changed character. So what I mean is, in this case now, I'm going to use breakout structure as an example, right? In this case here. So this is usually a breakout structure. I would name it. Yeah. So this is another breakout structure, but we're coming to that. So when I talk about range now, the trading range, it means the point in which you're expecting market to, or the area in which you're expecting market to come and give you a a a confirmation to enter the trade and continue in the same direction, right? So after this market has broken structure here, what are you waiting for? You're waiting for market to now have a reverse and come back to give you a low point so you could buy. This is a buy, is a bullish market. Yeah, this is a bullish market. So you should see this is a bullish market. Yeah. Don't forgive the way I'm putting this in, but yeah, it's a bullish market. It may not be straight, but yeah. So you're now waiting for market to come give you a point of your entry, a confirmation of your entry. So from where that swing started to after it has broken that structure and where it started to reverse back, that whole area is called your trading range. So this is what I mean. Between this point and this point here, sorry, sorry, that's just itching. Okay, sorry about that, guys. So it's between this point to this point after the break of structure. So once market shows you by confirming this break of structure that it is continuing to the upside, then you wait for the retest or the comeback. So the whole of from here to here is where you're waiting for the market to give you a buy position. So anything that makes this market to go below here, to go below this point, to all the way run down to below this point now, is no longer a range where you're expecting buy. So your buy range is just between this point and here. That's all you're waiting for, between here and here. I don't know if you get what I'm saying. So if you get market to give you another range, sorry, if you get market to come down below this point, if this market, let's say this market now had come down below this point, you're not anywhere below this point, you're not waiting for a buy anymore. You understand? Once market changes character, because this will now be a change of character point, right? Because it's a swing area. Yeah. So, but anywhere below that point, you're not waiting for that anymore. But once it's above that point, anywhere around here, market is giving you a confirmation for a buy. So you're waiting for which area of this chart or of this price of this market do I wait for a confirmation? So that area becomes your trading range. Take for instance now, this one is somewhere here, and you have this high here. You have this low. This is the last low of that of this drop, and this is the swing that got it to that last low. This is the swing here. This swing here got it to that last low. This little swing here got it to that last low. So, and now market then comes and break above that swing, causes a break of a change of character, because this is a swing change of character. You know, it was trending down because it took out this low, so it became a downtrend. So the market change breaks off this place, it has become a change of character here. Right? It has become a change of character here. So once market takes this out, what you're waiting for is between this area and this area, where do I come before the reversal? When market starts to reverse, where do I come and take my buy from? So between here and here, all this whole area here, where do I come to take my buy? So that area where you're waiting for is now called your trading range. This area here, between here and here, between here and here, this is where it's called your trading range. All right. Between this point now and this point is your trading range, the range in which you're expecting market to come give you a bullish range or a bullish trade. Yeah, a bullish confirmation for a trade. So that's what is called a trading range. So let's look at the real market to see. I hope you understand this figure. Yeah, so this one too, the same thing. Once market clears off this place, between here and wherever the market starts coming back down, it's called your trading range. All right. So I know I have a lot of students that have taken that, found this difficult to understand. So this is why I'm making this video, so they could get it. So let's look at the real market now. Let's see what's happening. So you could see that, let's start from here. Let's start from here. So you could see that we have a low point here, a low swing point here, right? Look at it. We have a low swing point. This is the swing point because market came all the way to this point to swing from here to the upside. And before we had that low, we had this high. So this high was the swing high that got us to that swing low. Okay. This was the swing high that got us to that swing low. This swing high here got us to that swing low, right? So now this swing high was like your last lower high in a downtrend. Yeah, it was like your last lower high in a downtrend. So what you do is you wait for market to clear off that area, to break that area. Wait for market to break it up. So once market takes that off, hold on. Okay, so I'm just having some nasal congestions. Okay, sorry about that. I know that's disgusting and all, but really sorry. Okay, so let's go. So once market takes out this point, these points become your change of character points, CH, CH. Yeah. Then once market takes it off, wherever the market starts coming back down between here and wherever you have markets start coming back down, then that is, remember, this is a consolidated area. It's not in this time frame, it's not necessarily your how do I put it? Yeah, this is a consolidated area. You get. So in this time frame, it's not necessarily your swing point. Yeah, it's just consolidated there, so it will keep going higher. So market went up, broke it, went up again, caused another low, went up again. So now market, this is where we have the all-time swing between this point and here, because this is where we have the main swing. Now market swung from here down to the downside. All right. So between here, between this point here, between here where you have this lowest point to this highest point here, this is where it becomes our trading range. So we are expecting markets all the way from here to come down anywhere in this area to give us an entry, so we could enter the market and buy the market, because it is still bullish. It's still a bullish market. So we have our swing here. We have another swing which indicated itself at this point. Yeah. Yeah, we have another swing here that indicated itself. So in the area where this is where you now look out for, where is market going to give me a confirmation for entry, right? This is where you now look out for the area where market will come and give you a confirmation for entry. If you notice, we've treated support and resistance. So if you look in deep, you would see that we had why is this thing doing like this? I want you to be big. Okay. So if you look in deep, you see that we have a support or a resistant on support area. Yeah. So this was formerly a resistance at this point, then broke it and turned support, consolidated there before shifting or continuing to the upside. Then later came back down to give you this point. So if you're following me, I'll later drop a video on what you call liquidity sweep, liquidity grab, because that's what happened here at this point where they had to come to take off all this liquidity hanging here. You get even this one here, they took this one as well. All right. So, but we'll talk about all of that. We'll talk about all of that soon. Okay. So, but just understand that between this point and where market finally starts swinging down from, where you now have the major swing, this is a major swing, market swung from here, and then you have another major swing down from this area. This is called your trading range, right? So let's look at other options. This is where you now got market to come give you a a confirmation for an entry. So this was your confirmation for an entry here. After market gave this little engulfing or these patterns, then market started shooting back up again. So let's look for another example of a trading range. Yeah, let's say, okay, let's say this one. Yeah, so if you look here, everywhere here is just range, 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 range. We're having a range. See here, market range after it broke this point. Yeah, after market took out this high on a break of structure. This is now a break of structure. After market took out this high on a break of structure, then it came back down again. This is another good swing to the upside. Came back down again here. So your trading range will be between this highest point here before the swing low, right? This highest point here and the lowest point here. This is where you're expecting market to come back to give you a buy. So this is like a shallow retracement. It's not up to 50%, but this one was actually up to 50% you get of the trade. So this is where you need Fibonacci. You could use Fibonacci to find out the area of retracement on this. I think I have that here. Okay, it's not here. It's not here, but it's somewhere around there. So, but then this is it. This is it. This is what we're talking about. This is what trading range is. Okay, this is what the trading range really is. So, yeah. So I hope this helps you guys. And should we do one more? Okay, let's do for a sell. Yeah, let's do for a sell. So we know we're good to go. Let's do for a sell. So we have this all-time high here. We have this all-time, not all-time high though. Not all-time high. So we had this swing, this big swing here, and we have another swing here. Yeah, we have another swing here. Maybe I'm going too far. Yeah, yeah, maybe I'm going too far. Okay, let's talk about this one. The swing that got to this point is this swing here, this area, this low point area here. That's the swing that got to that point, right? So if market were to break it, this is where market would have come to break it. This is where we would have seen the break. Yep, market broke this point. Now, once it broke, we're now waiting for it to come back and swing into the direction. Yeah, into that direction before we can take a sell. A buy, yeah, a sell rather, before we can take a sell. So this is where market finally started coming back to swing into that direction. So we have our major swing area here. So once market has cleared out this swing point for a sell, this is like your change of character point for a sell, right? So we're waiting for market to come back and give us an entry anywhere here. This was actually a good order block entry taken from this order block. Yeah, taken from this order block. Was actually a good order block entry. So if you're following me as well, I will drop a video on order blocks, So, and also how to also set pending orders on order block. Yeah. So if you actually caught this trade, this was actually a nice order block trade. Came in, tapped in on it and left, then start pushing down. So your trading range in this case, after it has taken out this low point, this low swing point, is between this point here, is between this point, this highest point here, and this lowest point here. Yeah, this is your trading range. So you're waiting for market to come anywhere around here. This is what they call a deep retracement. So we have three types of retracement. We have the shallow retracement, which is somewhere around here, the 50% retracement, and a deep retracement. Okay, so SMC traders usually use more of like the deep or 50% retracement value. So yeah, so this is an example of what you call um, a deep retracement. So in this case, market didn't come back to somewhere here to give you an entry. If you notice, there was no confirmation of an entry here, but if you look closely, there's a chart pattern here which is called the head and shoulder. There's a shoulder here, right? A shoulder around here where it came gave you this. Then there's a head here. There's a head here, came gave you this as well, then give you another shoulder here, then pushed down to the downside. So it more like looks like a shoulder, a head and shoulder pattern. So yeah, this is your trading range where where you're expecting market to come back and give you an entry for a sell. All right. So it's everywhere actually. It's actually everywhere. If you look deep in, you would see it. If you look deep in, you would see it. They're everywhere. So I hope you get the point. So most times if market doesn't give you a good range, a good confirmation, then you let it fly. I'll give you an example. You see what happened here? This was a swing point. This area here was a swing point to this area here was a swing area to the upside. This area created this swing to the upside, and this upside broke out from this swing. There was a swing here. There was a swing here. Yeah, there was a swing here, little swing point here. Yeah, we could call here our swing point as well. Yeah, we'll call here our swing point to the downside. But then market was trying to respect this one here because already it's in a downtrend. Yeah. So if maybe you were not looking at it, you were not looking at it as per the trend, you're confirming this break here and you're waiting for a structure here to come in and give you, I don't know if you understand what I mean. You're confirming this break here, the break of this level here, right? You're confirming the break of this level here to the upside, and you're waiting for market to come in anywhere between this point and this point to give you an entry. And it doesn't give you a confirmation. If you notice, there's no confirmation here. Yeah, there's no confirmation here because then market overall is still in a downtrend. So would be the best one to take would be the sales. Yeah, it will be the sales. Market gave you this low, swung to the upside. This was the swing here. Swung to the upside here. Hold on. Yeah, swung to the upside here. So after I gave you this swing, yeah, after I gave you this swing points to the upside, then came here, use this upside now to swing to break above this low. If you see how it broke above this lower swing point here, broke above this lower swing point here. Yeah, broke above this lower swing point here. So between this point and where the market starts coming back from is now confirmed as your entry point, or as your range. So you see how market came back to all the way to the beginning of that range area because there was a zone there. If you notice, there's actually a zone here. This was actually a zone. This was actually a zone. So if you notice how market also came back all the way to this point to now take out that point. So it didn't necessarily take out this point. It did take it out by weeks, yeah. But if you had your stop loss, all of those there. But I would have preferred to wait for a good break and retest, a good confirmed break and retest. So if I was to put a line here at the tip of this week would be where I'll put the line at the tip of this week. So if you look closely, you see that market never actually took out this range, this swing point. Market actually never took it out. It just came, tapped on it, and continued down. So this would have been a good confirmation for a sell or for a continuation sell. This would have been a good confirmation for a continuation sell. So I hope you understand. At this point now, your trading range will be between this point and this point here, where markets started swinging back to the upside. All right. So that is what trading range is about. So if you enjoyed this video and you have more questions, drop a like and drop your questions on the comment section, right? I could always come back to, give you a more elaborate explanation for this and share this video, like, subscribe. If you're not yet um, a member of this channel, subscribe and turn on your bell notification. Okay. So see you guys in the next video. Bye.